Alrighty, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 12th of October. I appreciate everyone being here, and I hope you value these so you know what's going on. Last Monday, go ahead and throw that out. That was a complete waste. I apologize. It's just, what can I say? I was on one last week, so I apologize, and I'll do a better job next time. Let's just put it that way. Last week, huge up week, 3.8% on the S&P. That's 2 weeks in a row that was higher. And in all honesty, technology led the way. I don't know if you remember, but at the beginning of the year, technology run was over. So I'm just going to go here. At the beginning of the year, technology run had ended by all market, what do you want to call the people on TV? Market experts, right? All the market experts had told you technology's done. It's over. It is over. And yes, Ida, everyone else can hear, so let me get that to Ida. Let's make sure I've got my volume up. It's up. All right. So out of curiosity, what do you do? What do you do when all of a sudden you're the contrarian, right? What do you do? I'm asking that because, in all honesty, my motto goes back to a backpacking motto. And the funny thing, it's called lonely and loving it. And the picture that's usually associated with that little motto is somewhere in the middle of nowhere that's absolutely gorgeous. For me, it's up in the mountains. I want to hike where I'm away from people, where I might not see anyone for 2 or 3 days. I'm lonely and I'm loving it. It's where I go to literally, I hide from people. Now, in the stock market at the beginning of the year, the key was technology was over. There was no more technology run, blah, 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 blah. You shouldn't be in technology. In fact, can anyone remember what was the #1 area or sector you should be in? And it's basically the biggest loser this year, which is hilarious. Can anyone remember what it was? Fangs? No, that's what they said you shouldn't be in, which is technology. Remember what the big push was? William and David, you're both correct. One said oil and one said energy. So I'm going to put them both together. The energy or the oils. Agreed. That was what you should be in because it was down so much last year. It was a dog. It was going to come back this year. Oops. It just makes you go, oh, really? Let's stretch these out a little bit just to see how accurate that has been. Well, the NASDAQ is killing it, comparatively speaking. The SPX, not so much. That's okay. Still have our run towards the end of the year. It is up, just not maybe significantly. Oil G, XLE, right? The energy sector. This is what you need to be in. Ouch. Looks like it was up as high as, 57, it looks like, right? Almost 60, down to 30.87. Now, this is an individual, index. Way to lose 50%. Way to go, market experts. ExxonMobil. Oh, man, what a dog. This has been 70 down to 34.65. CVX, I think, is Chevron. Not as bad. Looks like it's more at the 120s down to 74. ConocoPhillips. What a dog this has been. 65 to 35. Slumberger. Holy Toledo. 42 to 16. Murphy Oil, one that I was really into. What a dog it has been. Glad thing we got out of it. It's just awful. I don't see it. I think it's Dominion, right? Dominion is just D. I'm sorry. Dominion. Energy actually holding up nicely. Not bad. But if you're to go Pacific Corp, awful. That's not Pacific Corp. Don't know what Pacific Corp is. Of course, I'm looking in California, so that's not the one I should probably do. So I'll just hold off where it is. Interesting. Interesting because being a contrarian at times can be very difficult. But I think the whole time, Hurley Investments has been a contrarian. In fact, I'm kind of excited to have a conversation with someone. They brought to my attention American funds. And I knew back in the day they were pretty awful, but here recently they might have changed. With that said, as I did some research, they're still funds of funds. They're still front loaded. In fact, I can't wait for my conversation because if I'd have this individual in them, I'd make about 3.25 to 3 7/8% every year. Not my fault. It's the fund's fault. Just wait and you'll make money eventually, which won't happen because on average, every 2.25 to 2.35 years, they rotate out of the funds into a different one. So the life of the fund is very short term, in all honesty. I'm excited to be a contrarian. Hurley Investments doesn't invest in funds. We do our own research. Most importantly, we protect so we can be wrong without blowing up someone's portfolio. Probably need to put that on the other side. And most importantly, we let the numbers do the talking. Now, with that said, that doesn't mean That doesn't mean we don't get stuck waiting for a period of time. But there's a difference. And William, I don't want you to answer this comment, but what's the difference from everyone else that just says, don't worry, it'll come back. Don't worry, it's going to come back, right? What's the difference for Hurley Investment? I know we talked about it, William, so you're not allowed to answer. Not saying we don't say that, but there's a difference. What's the difference with Hurley Investments and everyone else? Going once, going twice. Come on, there we go. Bingo. We are actively doing something while you wait. Exactly. We're actively doing something. We're adding short puts. We're adding short calls. We're adding long puts for downside protection. There's a bunch of stuff. And both you, David W. and Maud, while you wait, and I'm going to go ahead and put that in here. So the equity doesn't have to come back as much. I'm going to copy exactly what you said, Maud. We're actively doing something. Whereas if we set you in a fund, oh, don't worry, it'll come back, right? It'll come back. Don't worry, it'll do this, it'll do that. It's the don't worry game. Don't worry, you're paying me 3.25% to 3 7/8 to lock you into something in a fund, but don't worry, it'll come back. What a joke. If that's what you want to pay your advisor, money manager to do, go for it. But I don't know why you would do that. It just doesn't make sense. I love it. When it really comes down to it, I love it. You've heard me say this before, but let me go ahead and go down this way. But for the most part, advisors have had it easy if things have been going up. But there were some pullbacks. And if you're close, you're within a couple percentage points, no one complains, right? But when we had the pandemics and we finally had our 35% drop, not just a 10 or 12, last year we had the stealth, 19, 20% or 20% for a day. Some people recently have been unhappy with their advisor. Here in the state of Utah, about 25% of the money is gone or evaporated. Quick question, what's the difference between happy clients and those unhappy or questioning their relationships? It's if their advisors, they say pivot or connect with their clients. It was shocking because in my continuing education, it was thrown out there that, you should do a webinar. What I heard overwhelming what could I talk to people for 15 minutes about? I was like, oh my gosh, I should raise my hand and say, I do 3 a week for one's 45 minutes an hour, the other at least 30 minutes. But I didn't want to give away my secret sauce, right? Oh, send birthday videos to clients. I kind of chuckled. I probably should do a better job of caring about your birthdays. But I'd rather care about informing you what your money's doing and why than trying to send you something on your birthday. The key is that there's incredible demand for education and awareness about how to invest. That's the key right there. What can I do to help you see what we're doing? And 3 of you said, nope, just make me money. It's all about the money, Hurley. Making money puts my issues, I think is what you meant to say there, at ease. But it's hard because some people are stuck in Boeing. I see one of you, see 2 of you here tonight. I think I see 2 of you. See 3 of you here tonight. Thank goodness we're in Boeing. Thank goodness we've made between 200 and 266% more shares. Thank you. Ma just said, and Baidu's a pain too. But we've actively done something so you're not taking all those losses. So you're getting the opportunity to have more shares. And I think something that's really ingenious is I learned through education that I want to understand what my money's doing, not on a daily basis, because that's frustrating, but more on at least a weekly, especially if we're moving down 35%. A lot of people in the RIA business are worried about their performance. And the funny thing is that some people say that, you know what, when you're older in life, you can't take as much risk. So you should go into a fund that is a money market fund where you're guaranteed to lose somewhere between 1.5% to 2% a year. It's ridiculous how Wall Street and funds are stacked against you. As someone asked, well, what are you doing, as they saw some of the returns and they actually were quite excited about it? What are we doing? Protecting for earnings and the uncertainty of the election. So it's simple. Thank goodness we've taken off both sets of puts on Apple for a profit. We added some puts, and then we had half the shares uncovered. It's going back up. We have a lot of leaps that were stock replacement for a better percentage return that eventually will get so far in the money they'll act as stock ownership. For those of you that didn't notice today, and dang it, Keeve and I talked about it, Disney says its primary focus is now streaming, which if it gets a third of the multiple that Netflix got when it started, which wasn't as high as it was now, you're looking at 197 to 203 to 204 as their number, their value of their stock price. crap. After hours, it's up $6.38. We're probably just going to keep our 135 puts in place for earnings or roll them out because I think they're October 28th. Finally, Disney's going to get some love. I don't know if it'll show up this way tomorrow. After hours is thinly traded, but there we go. We're off and running. Yes, you are correct. More accounts have been added. 3 more. More money's coming in. We're just waiting for some transfers. And I don't know, William. 234, 320. Let's do the math. 234, 320 divided by 3. Let's do 13. 2, got to take that away. 632. 632,000. Yes, it's a 1.71%. Even with protection on, today, we beat the market by 0.1%. So I think you had me higher. I think you got to, I guess that would be lower actually. You've got to take out the 234 when you're dividing your gain today by that. But yes, it's a 1.71, 1.72%. Not bad. And yes, if we take a look, we've got Apple, protective put, and half the shares without it. Boeing, running just the shares right now. Wasn't up very much today. Bank of America is protected for earnings coming up on Wednesday at 26. Had that on for a month. Baidu, a 120 protective put. We've had that on for almost 6 weeks. We really need to roll that up to protect. I'm trying to protect closer to 135 than 127.50. See what else we're doing here. Disney, 135s. Earnings for Disney is, I think it's the 12th, so we'll need to move those out in time. But protective put there. Ford. Kevin, why are you have protection on Ford? Well, because it got down to those lows at 680-ish. We took it off at 696. We let Ford run. Great upgrade today. I'd love to protect Ford at their earnings, which I think are on the 28th. I'd like to protect them closer to $8, if not $8.50. Facebook, we do have some protections on at 765. Yes, it's $10 more. We'll probably keep that where it's at, out of the money. We've got Micron with a protective put. $50 in November. Losing some money on that, but I'd rather be protected. The risk to the downside is too much. What else do we have here? Under Armour. Protecting at 12. I will most likely keep that protection on at 12 to run through earnings, even though it's at 1273. Just for the expectation that you'll see a bump usually pre-Christmas rally. So I will just keep that as it is. I won't be looking to roll those up unless we get some bad news. And Visa. Visa's another big one, core holding. 205 protective put to get through earnings. I'll keep that where it is as well. Pretty neat to have an overall up day on a very protected portfolio. So what it comes down to, you should expect more from your advisor / broker and find out what they really do for you. It's that simple. Where will our markets end this week? I'm going to go higher, third week in a row. I'm doing nothing more than following the trend. Pretty neat to go higher last week, but I was uncertain, I believe, but it's nothing more than following the trend. I don't think we'll be up much higher because we're going to run into those election uncertainties as the media, which sucks at giving us all of the correct information, is going to go for some fear. S&P still bullish. I like where it's heading. NASDAQ is also bullish. The reason why I made the comment, we're probably not going to go much higher on all three, if you had noticed. Overbought on the Williams percent R and are approaching overbought on the RSI. As you look at all three indexes, they all are carbon copy. We don't have much higher to go until technically we'll look to get into a bit of a sell-off. Where will we end October? I'm making a change. I'm going to go with flat. Just going to stay with flat. All the earnings, these are the same ones I told you last week that I was wrong on. I was off a week. We're starting the financials. We also have Alcoa there on Wednesday. It's a financials week, minus Intuitive Surgical, VF Corp, Schlumberger. Financials are going to rule this week. It's the first week. We'll probably have some more next week. And then we get into, in all honesty, then we get into our core holdings. The last week of October, first and second week of November, our core holdings report. That last week of October, it seems like everything reports. Apple, Ford, I want to say Disney, but Visa. In fact, there they are right there. Apple's the 29th, Boeing's the 28th, Eli Lilly's the 27th, Ford's the 28th, Facebook's the 29th, KeyCorp's the 21st, Visa's the 28th. A big portion of our stocks report then. Baidu has not yet announced, but it'll be somewhere between the 5th or the 12th. It'll fall into the first or second week. Knowing Baidu, it will probably be the second week, as they will avoid the U.S. elections. Options expire this month, or this week. I said it last week. Again, I was wrong. And actually, there's a little part here that I missed. It's not the Fed minutes, it's the Fed beige book. And as I went through tomorrow, FIB, small business outlook, and the NAHB housing market index. is on Friday. Internationally, there's nothing that I saw internationally that made me think, hey, we need to put something on. I did not spend a lot of time. It was a quick, brief look at it. Not much going on there that takes my notice. I'm really looking at the big red, which say they're important. China import exports, trade balance, might rule a little bit of our futures, but probably not. Don't see a whole lot there. Wednesday, President Lagarde speaks for European Union, not too important. Thursday, council meeting, Europe, nothing there. Consumer price index for China for inflation hasn't been a market mover. I just don't see anything. Retail sales, obviously, on Friday will be important. Options expiration. There's nothing internationally that I see that I would worry about. All right. Again, mostly protected for earnings. We'll move to full protective puts before our earnings come about. It's just common practice. With that said, make sure that you understand there will most likely be some positions we will have protection out of the money on. Again, that'll be Under Armour, that'll be Facebook, that'll probably be Apple to a certain degree as well. All right, I talked about our Disney. Disney's going to go more digital. If they can just start to get a bit of the PE that you saw from Netflix, you'll see Disney get up to that 197 to 203, 204 range. It's a good read. Amazon Prime Day is coming up tomorrow. It's funny because a lot of people thought with COVID, and they could be right, that Black Friday is toast. But look at some of the stores really come out for a 48-hour sales event. Walmart's doing the whole week they have sales. Target has their days. You're going to see more of this sales days online, where if you buy online, you get some ridiculous discounts. Look for this. But our Amazon Prime Day starts for tomorrow. If you're doing Amazon, don't hesitate to look at some great deals, especially if you like some higher end or more expensive things that are between $200 to $500, where you seem to get the most savings on them. Over 40 airlines have failed so far this year, and more are set to come. If you're worried about the airlines, you have good reason to be. Please read through the article. Most of them are the small regional ones, so just pay attention. Hopefully we can get our second round of stimulus here, and we'll go from there. Interesting article on Garmin. Excuse me. Here's a success story that's come back from the dead. Please feel free to read how advertising and how changing things up are working a little bit. And then, of course, I gave you the growing RIAs aren't bluffing, that yes, you should expect more from your RIA. And as it shows, a lot of what's out there is the fact that people are expecting more from their advisors. About time, instead of just sticking them in a fund and saying, don't worry about it. Questions. What questions do you guys have that I can answer for you tonight? Yes, I did leave on Friday to go up to Jerome, Idaho, south of Boise. We went up on the Snake River on a Duckworth boat, trying to catch some sturgeon, only caught some whitefish. It was a pretty good time, but it was a chance with an up day. Told Keeve I'll still be available by phone, but I'm running away for the weekend. great to get away. Again, as I told you before, it's okay to be lonely and loving it, especially when you've done your own homework and you're right in the stock market, or even more so if you have your protection on, right? William, so the short answer is yes. Question was, when is the best time to have protection on? And it's a threefold question, right? First, when you have technical crossovers. If you have technical crossovers, things are bearish, things are going to go down, you should have your protection on. I'm going to tell you 1 to 2 weeks before earnings. And the best bang for the buck is at the money. And 3, prior to a management or new product announcement. So the short answer is you're looking for those times of uncertainty, right? Those times of uncertainty are when you should have some protection on. There are times that you might not need it. That is okay if you want to sleep at night. It's okay if your stock makes up more than that protection, so you're not losing money. As I told you with Apple, nothing like being able to take off your puts for a slight profit, one for a great profit, and getting some back on and waiting for it to run back up to get some more on. Disney, I can't believe it's up $6 after hours. Probably take the protection off, let that run for a little bit, at least up to 150, and maybe we'll put Disney protection on at 150 here next week as it's continuing its run. So the short answer is it's a social science. You need to take some things into consideration. Do you have technical crossovers to the downside, which means your stock will probably go farther down? You want to put on a couple weeks before earnings as to not pay for volatility crush. Overpaying for that protection as volatility kicks up and makes your protection using options more expensive. And obviously prior to a management or a new product announcement, it's 50-50. Sometimes it goes up, sometimes it goes down. Disney, it's going up. Apple usually goes down. It's just a matter of knowing your stocks and trying to decide when the best time is. If you can read their outguess, let's see, if you can read the future, outguess the market, you'd have to tell me. But the best answer for you during high times of uncertainty, that's best when the probability is most likely the stock will fall down that you get protection on. It's really that simple. Good question. Are there any other questions tonight? So the answer is yes. Do we really have a market gain of 3,448,000? Yes. Do we really have a market gain for Coda at 838? Yes. Nope, sorry, it's a million 18. Yes, and the neat thing is, remember that's on 4 million. You got to take that gain out when he started. So yes, that's legit. Those are real numbers. Kind of neat. I know some of you are going to go, well, damn it, mine's not up that high yet. Relax, it'll get there. It'll get there. You know what helps out? Having some great stocks that drop down. You're most likely in that position that, I don't know, plain simple, that you're probably looking at waiting on Boeing, waiting on Under Armour, Ford. There are a couple there that could have some really good movements. So it's just a matter of being a little bit patient, letting those come back. All right, I see no other questions coming in. Guys, have a wonderful evening. I appreciate you being here. For those that came in late, make sure you join us here in just, I guess, tomorrow as I get us online. Guys, have a wonderful evening. I appreciate your time. Look forward to earnings coming up this week, and then we have a week off, and then the following week. I look forward to seeing you tomorrow. We're going to throw out some ideas on what you could do for a earnings/election month. Guys, take care. Appreciate you being here tonight. Talk to you tomorrow. Bye-bye.